All right, then the headline inflation rate for June 2025 moderated to 22.22%. That's in the month of June. The inflation rate that's relative to what we had in May 2025. That was higher. That's 22.97% in the month of May. So there was a difference of 0.76% looking at what happened between the months of May and June. Now, this was disclosed not by me, but by the National Bureau of Statistics. That was on Wednesday. According to the latest Consumer Price Index report released by the Bureau, the year-on-year inflation figure represents a 0.75 percentage point decline from what we used to have, and a significant 11.97% drop when compared to June 2024. On a month-on-month, we have this 1.353% in May, and that's a bit up of 1.67% from the figures we have in the month. That's the Consumer Price Index for that month-on-month rate that we have. Now, the decline in annual inflation is being recorded against the backdrop of a rebased index with 2024 as a new base year. Now, on a month-on-month basis, like I said, inflation rose slightly to 1.68%. That's blind to looking at this, and compared to 1.53% in the month of May. There was also a difference. That suggests that while the pace of price increases is slowing on an annual basis, prices are still rising faster from one month to the next. That's what this figure is telling us. Let's look at some of the figures for the year-on-year figures. Transport 2.37%, restaurants and accommodation services 2.87% increase, food and non-alcoholic beverages 8.89. The NBS report reads that the Consumer Price Index rose to 123.4. That's in June 2025, reflecting a 2.0 point increase from the preceding month. That's 121.4. In June 2025, the headline inflation rate is to 22.22% relative to the May 2025 headline inflation rate of 22.97%. Let's see food June CPI 40.87%. That was in 2024, and it's now down to 21.97%. Don't forget, it's a rebased CPI that we have here. That's why we have this bit of drop that we've seen here. Month-on-month core inflation rate for June CPI 2.46%. That's for 2024, and that's 1.10% for May. That's 2025. Well, that's a breakdown of some of the figures, but I have with me in the studio the head of research at Ankoria Assets Management, Ms. Orolua Odetunde. She's already looking at me here and ready to break this down for me. I've been waiting to have you in to do that. Thank you so much, Orolua. It's good to see you today.
Good afternoon. Thank you for having me.
Yeah, thanks so much. Let me say first how you will react to these figures. Many will say, well, it was expected. We've seen that decline for 3 consecutive months now. Yes. So what were you expecting at Ankoria? Let me take it from
Yes,
there.
we did expect a decline in inflation. And I mean, when you look at analyst forecast, I think the expectation was that inflation should land between 22% to around 22.5%. So I think every other person has actually forecasted a decline in inflation. But I mean, when we did see, the numbers, 22.2%, I mean, it was positive. It was a welcome development, but I think overall it was a mixed bag kind of data. On the nominal side, inflation is coming lower from 24% in January 2025 to 22% now, so that's positive. But when we started to look at, the food index and the core index, we started to see that, price pressures are still quite persistent on both legs. So by and large, I would say that overall we had, nominal figures appear, quite positive, but we noticed that the major driver of that downward trend in inflation is majorly driven by mathematical computation, which is, that very high base effect that we had in 2024. Like you had earlier mentioned, we had inflation as high as 34% in June 2024, but now, and when you're also looking at those CPI numbers, we're having lower CPI numbers, despite the fact that inflation has somewhat, stabilized, so to say. But the fact that we had a high base for last year, it appears that inflation is coming down. So it's more of a mathematical computation, not necessarily that we do have some level of deceleration happening in terms of inflation.
What are the key drivers for you? What do you make of the key drivers for inflation at this time?
Okay, so we